Welcome back to NYSE TV Live, everyone. We are open for trade. A big crowd for Figma's IPO here at the New York Stock Exchange. You can hear some of those chants behind us. With markets officially open for trade, we are still awaiting the first trade bell, of course, for Figma and Shoulder Innovations, another company going public here at the exchange today. I do want to bring back in Michael Renking, Senior Market Strategist at the Stock Exchange. Michael, so much to cover, as we mentioned earlier in the show.
Absolutely, and it's a loud one.
And it's a loud one indeed. So let's get to the Fed, because the Fed delivering its July decision yesterday, keeping rates unchanged as markets expected. How did they lay the groundwork for what may be to come on rates?
Absolutely. So it's always about expectations when when you're talking about kind of financial markets. Markets largely expected the Fed to leave rates unchanged. Now, I think where there was a little bit of a differential is that in July, or in the June meeting, right, the Federal Reserve began to set the table for rate cuts in the fall. Right, we liken that to putting down the tablecloth, maybe the silverware. Yesterday, I'd say they kind of put down the fine china, but markets were sort of hoping that you would see the appetizers come out, right? So Chair Powell kind of largely stuck to his script, suggesting that interest rates kind of are modestly restrictive, but not at a point where it is actually slowing down the economy, right? But then he continued to highlight kind of the uncertainty and the uncertain impacts from tariffs on a go-forward basis, and whether that's going to start to push kind of the inflation environment higher, right? And so he said that at this point they're going to stick with this wait and see stance. They maintain that optionality. He didn't take September off of the table, right? But he also didn't put it squarely there.
Yeah. Okay, so as it relates to trade, obviously August 1st, tomorrow, is another deadline for deals. Treasury Secretary Scott Bessent said there are the workings of a deal with China. What do we need to know about the status of these tariffs and what could happen tomorrow?
Yeah, so, well, overnight we got to deal with South Korea at a 15% tariff rate. It looks like the negotiations with Canada aren't going so great. Mexico, seems to be, they're meeting with President Trump this morning. Look, I think from where we were at the start of the year, tariffs are going to be much higher than previously expected, but we're nowhere near kind of the high watermark that we had seen in the Rose Garden, right, back in kind of April, right? So we're falling somewhere in the middle. It is going to likely have some sort of impact on economic activity, potentially slowing demand, pushing prices up. It's just a question of kind of the magnitude of how much that happens. China is still kind of the wild card. We haven't got an official communication from President Trump at this point. It does seem like we're going to get a 90-day reprieve and kind of continue those negotiations.
Of course, we'll be busy here at the Stock Exchange throughout the month of August leading into the fall, but we won't hear from the Fed again with any sort of updates on trade or tariffs or inflation for that matter until after the Labor Day holiday. What should our viewers expect in terms of seasonality trends and what we might see play out given the state, including volatility over the course of the next 4 to 6 weeks?
Yeah, absolutely. So, I mean, we will, we'll start to hear from some of the Fed officials, and we'll hear from those dissenters that we had yesterday, where they'll start to lay out kind of why they were dissenting, right? And we'll hear from them in the Jackson Hole Symposium. But I think, the real big thing from here is that we're going to get 2 big rounds of economic data ahead of their next meeting, right? So the first piece of that comes tomorrow with the non-farm payrolls report, right? And then we'll get the CPI data for 2 months. So that's going to give them some of that data that they're looking for to make a decision. In terms of seasonality, August tends to be a tough month in general. Kind of historically, it's also the worst month historically during the 4-year presidential cycle. So for after an election, it's the worst month of the year. Now, look, I mean, we've had a very big run off of the lows. The S&P 500's up over 25%. With what you're seeing from earnings, right? The earnings backdrop has been pretty positive, and you've seen quite a bit of strength, kind of from the tech side particularly, and we talked about that in the earlier session. Where you get into a little bit more, where it'll be a little more interesting is as we get towards the end of earnings season, that does tend to be more consumer-centric, right, focused on the retailers. That's where you might be able to, where you might start to see a little bit more kind of weakness on the and impacts from tariffs in earnings. Look, I think that from here, markets have had such a big move. I think some digestion, right, would be healthy. Some sideways action, kind of as we get into the, coming out of the holiday.
Is there anything that you're seeing in terms of sector rotation or even sector outperformance now, as I think the markets do get more acquainted with what a second President Donald Trump term looks like?
Yeah, so we continue to see these fits and starts of rotational activity, right? But at the end of the day, the big cyclical drivers, right, which once again we saw last night, right, you're seeing where the real impact of all of this AI spend, right, is happening, kind of in those mega cap tech stocks. Now, like today, right, we're seeing some of the small caps, which we're hoping that we were going to get a rate cut, kind of earlier. Those stocks are pulling back a little bit, right? Those companies are also a little more exposed, kind of on, in terms of the impacts of tariffs, right? So we're seeing, some areas of underperformance. What we have seen recently, which it's nice to see it calm down a little bit, is some of the really speculative areas of the market have been moving sharply higher over the last couple of weeks. Highly shorted stocks, non-profitable tech stocks, the crypto complex, and really kind of downstream into the altcoins. Some of that has started to ease over the last kind of couple of days, which I think is healthy for the market, because you don't want things to get kind of really overextended. And so some digestion here, I think is very positive for the end of the year.
All right, well, we heard the cheers behind us again. Michael, we got to make nod to Figma's IPO happening here at the stock exchange today. And that was Michael Reinking, who's a senior market strategist for the NYSE, breaking down everything we need to know. Thank you.
Thanks for having me.
Yep.